The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time. And most importantly, it's great to be able to say I followed Steve Rose, kicks us off at 9 o'clock. Great shows as always. And let's say Thursday today, yep, Larry Pesaventa comes in after me. And then we have Daryl Martin. We've got Dave White, got Ken Shreve. We've got Tom O'Brien wrapping up 4 o'clock till 6. Just a great session today. Dow's up at all-time highs. S&P has not yet made that all-time high. It's trying. I got a feeling that it's going to wait until next week to do it. It's going to kind of fool everybody, and it'll only do that next week, maybe, midweek, something like that. We'll see. I could even do it today. Of course, I'm not the market. I'm just looking at the parameters. Now, what is important as far as I'm concerned is to be able to get this set up so that I can see the charts the way you see the charts. There you are. Have I got it? Yes. Okay. Now, in looking at the market itself, there are a couple of things that strike me. There was action today, and that action today seemed to me to be kind of forced. It was almost, if I was short, I'd be gasping for air. I'd be saying, oh no, it's impossible. 8 days of new highs, of up sessions, not happened since 16 years ago. 9 days? Impossible. And then wait a minute, a 10th day? Oh man, the chances are so slim. Surely you should be able to go short today in comfort. There's no such thing in the market. However, just between you and me, I think, in fact, if the Dow doesn't get above 14,520 in the next hour, but instead starts to slip underneath 14,490, then I think we've probably seen the high for the day. And probably tomorrow with options expiration, why not wipe out a bunch of the calls and maybe go into Monday, and then Monday we can start fresh. And maybe that's Monday, Tuesday we start to tackle new all-time highs in the S&P. So with that said, 877-927-6648. Had a couple of questions. What I'd like to do right now is just run the numbers. Dow's up 53 at 40,508. S&P is up 5.5 at 1559. This is, this last move up has kind of been, it's beautiful if you're long, and thank goodness we're still long the DDM, 200% long the Dow, although I'm real close to either taking profits or maybe even switching to the other side, but I've got to get my leg D in the Dow, and we're in leg C. Now, what's interesting is that the SPY and the diamonds, you always get something that isn't quite right. The diamonds and the SPY ETFs are off by one. They are only in leg B. So how this is going to play out, but I have something for my subscribers that I'll be discussing about the stork leg formation, which might clarify it. So we'll get into that for over the weekend. I'll do a little report on that. Meantime, back at the ranch, you've got Comp Index up 10 at 32.55. Apple's up a little. It's up 4 at 432. And this is going to be very interesting. You've got gold down 2. It was down deeper earlier on, 1585. It really is trying to establish some kind of a base from which to have a bounce. Silver's down 16 at 28.75. Copper is the issue. Copper's at 92.0. I keep jumping the line. Copper's at 3.5. It's up 1. It's in this trading range trying to come off a bottom. If it's able to come off this bottom, that's going to be very important. And I would only be satisfied looking out intermediate term if copper can get back into the 4s. That's a long way to go. Meantime, back at the range, you've got bonds down a half a point at 141.03. I'm kind of impressed at the way the TLT is holding here. Now, holding is not necessarily rallying, but it isn't going down as deep as you would expect. Why? Remember, I discussed this about the dollar. Let me just do the dollar right now. If you're looking at Tiger TV, this is the dollar coming up. And what's really important about this is that in looking at the different charts, what you want to be able to see is that the dollar is in leg E. Now, this is going to be very important. This is something that I always discuss with my Master Trader series. The difference between the instant restart and the price that has an instant restart but really has a parallel waveform, or it is an instant restart that is at E, maybe F, that's where you've got to be careful. And I suspect that the dollar is really close to at 82.83, testing the 82.48 9-period exponential moving average and probably closing below it for the first time. That could happen by tomorrow, or might take a little time, maybe by Monday or Tuesday. If that happens, you can start to see the euro bounce a little bit. Steve did a great analysis just now. I did GBP USD currency pair. Look at this. Nice bounce off. Look at that beautiful candle at the bottom. Look at the way you've got a rising stochastic, rising W formation in the MACD fast moving average. And in fact, it's over the 9-period moving average. So you've got the Great British Pound. 1.4830 was the low of the 12th. And now it's trading at 1.50. This is just the start. When you've had such a deep correction, you always have a little bounce. Now, I had drawn this. I can't remember if I did it for subscribers or myself the other day. A left side, right side price time match would have taken us to the 14th. That's yesterday at 9 o'clock in the morning. 9 o'clock in the morning. Instead, it happened this at 11 o'clock. It almost touched the left side high of 1.504. So that's in sync. Everything's working out very nicely there. And most importantly, 1.51 would be the 200-period exponential moving average upside target in the Great British Pound USD currency pair if it takes out 1.50464. When I used to do a little trading of these things, I hate it because I'm looking for peaks and troughs. Do I want to go? How am I going? I don't even remember what I said. 1.50464. I know traders have their way of just lopping off and talking about 464, the last 3 digits. But man, I'm telling you something. It's tough. It's tough to label the peaks. I like to label even when I'm trading. Even the E-minis, I do my left side, right side, I do all that, all the cup, the arch, whatever it is. I just typing away while I'm trading because I like to have focal points. I want to know where I'm going. Now, there are a couple of very, very interesting things here. I just want to do this because WK13, wheat is also just bouncing nicely. It's broken the 200-period exponential moving average in the 120-minute chart from the most recent. Now, I don't trade these, but I'm always following them because I think it's very important. Just like intraday, I'm following a bunch of things. Even if I'm trading, I find that I love this domino effect. I like to get a big spectrum of what's going on, what I'm looking at, why I'm looking at it, what can impact, what can affect, and what can effect whatever we're looking at. So wheat right now is bouncing very nicely, also coming off the bottom in leg B, just like the Great British Pound USD currency pair. And this is a little different. Why? Because it's testing a very key support. The wheat contract, this is, I think, April, May, tested the 679 low of the week of the 15th of June. It went up to a peak D. Now, I thought today I'd spend a little time talking about how many times you can go to a peak D in the ChapmanWave. I don't think I have to do it. I mean, geez, you've seen these charts over and over and over again. You know that that's a really important notation, going to the 4th highest peak. If you're new to the program, I look for the lowest, most obvious left side bar from which to start a count. If the technical starts to confirm or the price pattern confirms that it's breaking out, it should go to at least 4 higher peaks. A, big B, label them capital uppercase to the upside, lowercase to the downside. It made a perfect left side, right side price time match, the most important candle. And what does it do? It's above last week's high. We've still got Friday to go, one more day. But I would say that this is a bounce target of 741.5. It's at 719 right now. But only if on Friday it doesn't slip to the 712, 710 area. It has to have, I don't care how much higher, but it needs to break into a high today of 722 and three quarters. It needs to get into the 720, 725 level by tomorrow, and preferably close somewhere above 719, 720. Now, this is also important for me. UNG, I've been following it closely. Natural gas. And folks, if you're looking, this is the first time you're looking at my charts. The left side chart is the daily, the right side, the middle is the weekly, the right side is the monthly. And when I drag this one up here, you'll see it's the 120-minute chart, and that's in leg F/B. That's very positive, and I'm calling it F/B. I'm not going to say it's an F. It's more likely a B because of the strength, the gap up, and the strength, and the technicals are very, very strong. So, natural gas appears to me to be going higher. It's had a fabulous move to the downside because it didn't go all the way. It stopped, and it's rallying back, which gives it much more a chance of a cup formation now, trying to go back to the top, than a very negative arch formation. So those are the things. And then I wanted to do the TLT just to say the TLT is attempting to make some kind of a bottom here, but the monthly chart is just terrible. And all I can say is that the Lehman 20-year Treasury bond trust shares are, this is Truff E, that's an E minus over there. What I was going to say earlier on, I didn't quite finish my thought, is that yes, bonds would be much lower if it wasn't for the Fed pumping money. And the dollar, for the first time, is freeing itself up to move higher. But up until now, the dollar has been whack-a-mole, just bang, bang, bang on the head. They just don't want it to happen for years and years. Both administrations didn't want the dollar to be rallying too strongly, because I think the belief, I'm just guessing now, I'm really guessing, is that a lower dollar helped our export-import relationship, and it also helped our big multinationals in terms of sales. So that's the way I'm looking at it. Okay, now a question I had was, I just wanted to show this because there's so many people now using the ChapmanWave. This here is not, oh boy, where did I write it? On 2:15:13. Yes, I wanted to talk about the ChapmanWave just for a moment, and that's to say that in the ChapmanWave, one of the techniques I use is that except for the instant restart at the peak D, the low bar cannot be the high bar. So when you're looking at the chart of Chevron CVX, which is doing fantastic at all-time highs, Chevron all-time highs, amazing. Is this all-time highs? Yeah, all-time highs. Chapman, oh, my beautiful Chapman late on breakout. That bar, the bar of 25th of February, that cannot be peak A. You have to have a higher low bar, otherwise you don't know it's a low. I'll be back, 877-927-6648. I'll be back and take your calls if you want to call. Dow's at 54, S&P's up 4.8. Dow's a little stronger than the S&P.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians out. I had a question as to Away. Away is it's been a fantastic stock. It is the IPO was back in 2000. I think it was June of 2000, opens at 3610, pops up to 4230, slumps down to 1919. What happens is it goes to peak A, pulls back above 1919 to 1958. Now the monthly is in leg B with a target of 3224, the 200-period exponential moving average looking out. It's a monthly chart, remember? The weekly is in the process of making a peak C. I think it's going to make a peak C. I'll explain why. But that has a target of 32.09. So that's coincides with the 200-period exponential moving average of the monthly. That would be the upside target. It's made a peak A, B, C, D. It was a successful dreaded H pattern twice now. And the H goes to an M, and then it breaks out above the previous high of peak E at 2747 back on the week of the 12th of October. And then what happens is spirals up into peak A, B. It's in leg C, probably going to make a peak C if there's no high above 31.25 this week, and that just leaves today and tomorrow. And my daily chart says it's unlikely to do that because it's made a peak F, but this is the pattern that we're looking at. It's gone. This is like a miniature of the GLD. Look, it makes a little H, doesn't break the low, goes, makes another little H, and now it's testing. In this case, it's testing the low of 28.89. Today's low is 2 cents lower, 20. 29.89, and today's gone to 29.87. So it just snuck underneath. So this gives a trough, not a trough, leg beat to the downside. So my suspicion is, based on, I've got a down arrow from a peak F doji top, my suspicion is that this is going to pull back and it's going to digest these gains, maybe into the whole of next week. The test will be 28.76. So it's at 30.03 right now. If it takes out 29.58, the low of the 4th of March, then there's a good chance it's going to test 28.76. I don't think this is the move that tests the gap low of 27 round number back on the 21st of February. I suspect it's going sideways, and it will spike to leg D after D, which will be somewhere close to 31.50 to 32.30. 32, yep. I suspect that that's the pullback that goes right deep into the 26s. Hope that helps you. Now, let's go through a couple of things. I've been asked, will you give an overview? If you don't have callers, will you just please give an overview of the daily, weekly, and monthly? I can't really give a weekly because we haven't closed. Tomorrow's session is a better chance to do that, but I'll try. Dow. The Dow is in leg C. Most important about this is that each candle, let me just go to this chart here, which I show my subscribers every single day. This is the pattern that we're looking at. I'm making it as simple as possible. There's only one moving average, that maroon line, the maroon line. This is the daily chart. These are all and in fact, I'm taking all the comments. So I discussed this, that a new high, 1 penny above 14,478.81 starts leg C. So let me get rid of this. Very, very comprehensive report I give every single day. If you want to know parameters on the Dow, the S&P, the SPY, the TLT, the GLD, not necessarily always specifically the exact number. In many cases it is, but certainly the trend, what we're looking for. I'll talk about support when I think it's support that we need to look at. I'll talk about the resistance. Now, this is very important. I'm just finishing. I like clean charts. Let me get rid of this. Okay. You see this trend line? Beautiful trend line. I love it. How does a chart know to make a trend line? How, when it's rising, are these price points, why does it stop at a certain price point? I have a theory about that. My theory is that we're just talking percentages. If think of a Bollinger Band, or think of when Darryl Martin talks about deviations. Think of it this way, that in the majority of time, human nature, we aren't going to go too many deviations away from our norm. So even if we are walking uphill, we will still have those deviations. So that if we're going to happy at 7.5 or 8 and kind of sad at 3, all the way up the hill, every time we do that, it's going to make a channel between those parameters. And on the way down, it makes a channel to the downside on those parameters. No, it's kind of very simplistic, but if I can get you to think that way, like a ping pong ball in a tube. Now, what happens is that this trend line gives you that inside track, and that says that the area between 14,598 and 14,630 is going to be very, very strong resistance in the Dow based on this. We'll be back, and we're back with Craig in Portland, Oregon, straight after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians. Our Dow's up 54. S&P's up 4.86. Usually when the S&P, which is 500 stocks, is a little bit, when the Dow's slightly stronger, I've found that very often towards the end of the day, there's some weakness. So we're going to be watching this closely, and we'll get into the overview in a short while. But right in this very moment, we have Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
I'm well, thank you.
Good. Hey, without giving away anything from your newsletter, I just wanted to get your thoughts. I got into your trade on this one and just wanted to get your thoughts on if it's working like you were thinking it was going to work.
Okay. So, without talking about this
I don't know if you can do this.
right at this moment, it's actually up 40%. You know that,
right?
From the entry to this moment.
Right.
What I'm going to suggest, because you've asked me about it, normally I don't like to interrupt any thoughts about a trade because I have to wait. It's a daily newsletter. But if you actually ask me specifically about it, I'm going to answer you. I would start taking just a little tiny bit of profit now if you have enough.
Okay.
And I'll explain why. Because the price of the stock, folks, we went short every once in a while. I do my absolute best. I have a number of subscribers who just, they trade options. Some do it a lot. Some people do it just periodically. And we try to get a trade. In the last 3 years, we've had a couple of trades on IBM. We didn't have it last year, but the year before and the year before that were 250 to 1,000% gains on just tiny, they were real small, like 10 cents or so. I can't remember offhand. So I'd recommended a particular stock What I had recommended that we buy it, and it closed the option. This is the White Lightning because tomorrow they are completed. So this closed at 29 cents yesterday, and I'd said I want to get it at 10 cents. Unfortunately, normally I would put a stop in, but usually the day before you can still get about 5 cents no matter what happens. They try to keep a little premium in the stock. So to actually have a stop of 5 cents, I didn't really want it, although it wouldn't have been hit at all so far today. It might be hit later on, we'll see. But most important about this is that I figured that if we got it, and this stock, which was just over 50, went a little above 50, and by the end of the day came back and we gapped down tomorrow for whatever reason. I don't care what the reason is. And this stock just even started heading towards 50. We could start exiting this at 10 cents. Well, 10 cents we earned. At 16 cents, I think I said 21 cents or maybe 22 cents.
Yeah.
And then to hold the rest, if that happens today, to hold the rest either into the close or we'll deal with it. Okay. One of the reasons being is that we are playing not the premium, because now there's hardly any premium. There's very little premium at all. What we are playing is emotion. And when an option on expiration day or getting close starts to move in the direction of the premium, in other words, if the stock's at 50 and it goes to 50.60, say, and then towards the end of the day it starts to go to 50.30, then the assumption is, oh, this is a great, look how low price this is. This is a great option. And the premium expands completely different to what it should. It expands exponentially, but purely on emotion, because in reality it shouldn't be going that way. And that's really what we're trying to play here. So my recommendation, if you can, get the 14 cents from the 10. I would take some off right now. Normally I would want to wait that extra for the 16 cents, but it's the price of the stock is it's like 10 cents more than I would like it to be right now.
Yeah, I was wondering if it's acting.
You know what I'm saying?
Strong.
Therefore, that's why I'm recommending. In fact, you could do two things. You could say to yourself, okay, I've got what, as long as I don't get 10 cents, anything above that is a very nice premium. You know what I'm saying? But what I would say to you is, I'd handle it just a little differently. Normally, I wouldn't want to say a thing, and for my subscribers who are in it or aren't listening, it's not, in a way, it's not fair. But you asked me about it, so I have to answer you. The question is, what should you do? And my answer is that the price of the stock, it actually worked fantastically early this morning.
Right.
And you know what? I'm going to show the stock because there's nothing we don't. We got nothing to do with the stock. The stock has to do what it's going to do. I have no influence at all. So I'll show it and I'll explain exactly what I'm looking at. It's J.P. Morgan, and J.P. Morgan spiked. Today is the 14th, so it spikes up and it goes to peak D in the 2-minute chart. It makes an instant restart, goes to peak D again at 50.79, pulls back. That's where it started to look real good, into a left side, right side price time match, the same kind of pattern I was looking at just now in whatever chart it was, with that the arch, the H that goes to an M pattern and breaks underneath it, but it hasn't closed underneath it. So it's kind of neutral right now. My suspicion is that if it starts to decline, what you really want, if it takes out the candle of 50.56, that's the candle at 11:30 this morning, and starts to break, my target would be 50.44, which is the 200-period exponential moving average. As it gets there, the option should go to 16.
Right.
And if it closes near the low of the day, of course, these are all ifs. We don't know, but these are all ifs. If it does close towards the low of the day, I'm going to recommend at least take something off, because it could anything tomorrow. You might miss a great opportunity. Now, I would prefer to have it absolutely strict. We got in at a certain price. I said to get out at those levels.
Right.
That's kind of the way it is. But you asked me about it, and I'm saying to you, because the price has gone of the stock just a tad higher than it's actually not that. It's that it's hanging around at the 50.66 area. The longer it lasts there, the quicker the premium will shrink. That's all. It's real simple.
Okay.
But
because I was looking at the candle from March 8th, which is a pretty big candle. It's almost sort of like a Roman type candle.
Yeah, but J.P.
Not going to
Morgan.
get into the bottom of that sucker.
I know, but I also mentioned that this particular pattern says that you try for a rally towards the top. That's the asymmetric triangle. Right. And then it comes back again, which fits exactly the 120-minute chart, which I said could go into the rectangle. Now we're at the upper end of the rectangle. Right. Theoretically, this is where it should start heading down.
Right.
And, in fact, the MACD could deflect low. So, anyway, my recommendation says you could take some off now. I don't know how much you've got, but whatever you've got, I would still – I have to stick with the parameters I set because that's only fair to subscribers.
I'm sorry I called to ask you, but I just was curious because it was doing a little bit more than I was thinking.
It's if 50.86, if it pulled back and it broke again under 49.60 – oops, not 49, it was yesterday. If it broke under – even today, if it slips underneath 50.40, you'll start to see the premium come back. But they will shrink it real quickly if there's any strength at all a little later on. Okay. So, and you do understand, and I made it real clear. This is one of those you don't want to get carried away. You just want to. It's just fun. You want to treat it and say, I'm prepared to lose that amount because there's a really good chance of a gain, a very good percentage gain.
All right. Thank you, sir.
Thank you very much for calling. I appreciate it. Bye-bye. And, we've got, Craig in Portland. I skipped Craig. Craig, I'm so sorry. I wondered why I had the ECA chart up. How are you, Craig?
I'm doing good. How are you doing, Basil?
I'm good. That was Mark in Denver. How did I jump? Okay. Craig in Portland, Oregon. Yes, you wanted to look at ECA. Yeah.
I got into it down around 18, and it looks like we got a buy mode going in the weekly as well. I think we're at peak D. And it looks
trough.
Like
wait, you're talking about the trough on the downside. Remember troughs on the downside?
Right. No, I'm looking at March 4th as being a reset.
Okay. So
on the daily.
Okay. Very good.
And then I'm just watching the weekly because it looks like it's getting ready. We had a crossover on the stochastics, but not on the MACD yet.
Do you have a position in it?
Just a small one, a really small one.
Okay. I'm going to recommend that you stay, at least for now, with a small one. I think you got plenty of time if this is going to work. Yes, you might miss a pop-up towards the 19.90 area. But the way the weekly is acting, I suspect it's going to test the 1920 to the 1870 level come next week. Now, let me explain what I'm looking at. The low of the 4th of March, correct, starts a new buy signal. And in fact, it's a buy mode. I've already put the up arrow in. Why? Because the low of 17.51 on the 4th was met with a very nice little doji candle the next day, and then a huge move above the 9-period moving average. Stochastic went under 20% and then immediately above 20%. Beautiful beta in the fast-moving average and the slow-moving average of the MACD. The histogram is expanding. This is looking very good. And the candle today having held the 9-period. Oh, I know what I'm going to suggest. I'm going to suggest if you've got a small position, you could add just another small position. And here's my thinking. This has a target, at least for me, of 19.83 on the left side, the high of the 6th of February. There could be a pullback in the next day or two, but I suspect this is going to go to C and then D, and D won't quite make it towards the 20.49 is the 200-period exponential moving average. But with the MACD so strong, I'd like you in a little bit more of a position because the position you have right now, which is lower down, you might be able to treat it as a core position if two things happen. The first is if you get a position right now at about 1961 before it makes leg C at 1965, then what I would suggest, because it's C and it could pull back and then go to D, and D might not be very high, at least with this trading position, if it spikes up into the 19.81 or higher area, you can raise your stop to your entry point, and if correct, you might even be able to get to a D or even an E in this move without being stopped out of your trading position, and it gives you the comfort of your core position. But all of this I would not be very heavy in it. The reason is I've got an alternate count in the weekly chart. Boy, this one I thought was a failure, one of the few failures at a peak, a C minus. But in fact, I think we can call this comfortably a restart. So I've got a peak E. It doesn't matter what it is. The fact is that it failed underneath the previous high, so it could always fail at C minus. But that peak high of 24.29, the week of the 19th of October, came down to a trough E. That's what I did it too quickly. Trough F. Trough F. And very often at F or G, you can get a very nice bounce, and that's exactly what's unfolding. And you've got the left side low of 17.45. You went under it. No, you went to 17.51. So far, this could be considered a kind of a successful, let's call it a partially successful dreaded H. And because of it, it can go a little higher. And this is now leg 8 because it made a new recovery height this week. So I like the position. I'm suggesting you add another little bit as a trading position. The monthly's got a lot of work to do, but the weekly is giving you some signs because the stochastic's running nicely. It's over 20% right now, and the MACD is just about to cross positively, and the stochastic is, the on-balance volume is quite good. So yeah, and Encana is what we're looking at, ECA. Encana Core, they're in the oil gas exploration, is that right? Can't remember.
Yeah, that's correct.
Okay,
yeah.
So that's my thinking for now. Two things though. One is that the core position, I don't know what you want to do, but if you give it a little room, 1846, somewhere around there, if that core position is being tested at 1846, I'd say start putting a little bit of a stop there that doesn't give it too much room. I don't think it's going to go there with the stochastic at 86% in the daily. So I think you're in a great position. As I say, nibble now. If it gets to do 1966, it starts leg C. I think that'll be a nice trade because you'll have a core position lower down and a trading position that you can try to garner a little bit of profit to give you more cushion for when you want to add to it. If you want to add to it because the weekly is acting well, maybe by Wednesday of next week, if it hasn't taken out 18.85, the low of yesterday's low, then that'll be a very good sign. So yeah, good.
Great.
But I don't think this is an intermediate term position, but I treat it as a really nice trading position. Hope that helps you.
Sounds great. Thanks, Basil.
Thank you very much for calling. I appreciate that. Craig in Portland, Oregon. And I almost missed him. I got a little confused there. So, folks, we were looking at ECA. Now, I needed to, yes, I was in the middle of my look at the markets themselves. Now, the Dow's up 60, S&P's up 5.95. They're right in the sync, up 0.41% for the Dow, 0.38% for the S&P. This is really what I'm looking at. Because the MACD is still expanding, although the histogram shows that the difference between the fast-moving average and the slow-moving average is starting to slow, but it is still very good. The stochastic in the Dow is at 97%. The stochastic in the weekly is at 97%, and the stochastic in the monthly is at 89%. I don't have a single thing here that says that there's a sell signal in place right at this moment. I think I might be getting closer to it in the Dow for next week sometime. Well, we'll be back this time. We'll talk about these different things when I get back. Basil Chapman, Tiger Technicians Hour. Dow's up 59 points.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians. Now, let's just do a couple of things here real quickly. If I can just find these charts. Boy, have I got a lot of charts. There you go. The NQM, which is the NASDAQ E-mini 100 June contract, 120-minute contract, has a very clear rectangle formation. I showed this the other day. I said rectangles can last a lot longer than your patience. And what tends to happen very often is it goes up to the top of the price of the channel. Just as you think it's going to break out, it comes back down to the bottom of the channel. And as soon as this is a sideways rectangle formation. And as soon as you think it's going to break down, it makes this like a doji candle right there at 12 o'clock on the 13th. And it starts going up and it comes back. So that kind of pattern says, okay, fine. But really what's happening is that in the daily, there's a flag formation, which says, yeah, it could test 2787 in the next day or so, but there's going to be a breakout, and leg D at above 2008.17.00 is going to take place sometime early next week. Well, if you're looking at the various charts, look, the S&P, this is leg C up, it's gone above the one-to-one expansion. And what's fascinating about this is that the S&P made a high of on the 12th at 1556.77. Well, lo and behold, 1556.39 was the high bar yesterday. The high bar, not the high, but the high bar. High. And that's what? Less than 30 cents. And that constitutes a peak. And that says, good. Now we can go to leg C, which we're in, and the MACD and stochastic are fantastic. They're looking just great at this particular point. And it says you should go to at least a D, But wait a minute. The SPY, I love this. The SPY has extended leg B. It just missed. It had 156.04, 156.10, 156.12, and then it broke out. That could constitute a phantom peak. It doesn't matter. It's in leg B. The diamonds, unlike the Dow, are also in leg B. But here I would like to use the phantom peak, the two highs of 1470 and 1471, and call that a gray peak B, because it matches the Dow. So I'm keeping it in mind. In fact, I'll call this a gray C, knowing that it should really be a B, but I've technically made it a C because he had two parallel highs. Now, this is very important. The Qs, 1, 2, 3. The Qs needed to go above 69.02 by 1 penny, and they make D. Well, they haven't done that yet. Today's high, the day's young, is 69.01. So what does that say? It says the New York Stock Exchange, these are we can go to the very broad, like the composite index. We can go to the very broad New York Stock Exchange. That's in leg C in the daily, leg C, leg C in the weekly, and leg C in the monthly. This is very bullish looking out. Doesn't mean to say we couldn't have some short. When we get that D in the Dow and the S&P on the weekly chart, I'm anticipating in the teens a good severe pullback. There are a lot of charts that are very, very overbought, but that looks out, and that says you can't make a D in the Dow, INDU, until when? Until if we close down tomorrow and Monday through Friday, there's no new high above whatever the high is. Let's just imagine it's on the Dow, it's 14,523.82. Whatever the high is today, if there's no new high tomorrow and on Monday and the whole week, then we've made a peak B. I still have to wait for the following week for a potential C, then the following week for a peak C, and then the following week for leg D. This takes us into April. So at the earliest. So if I'm looking at that, I have to say I'm anticipating next week that we get peak D in the Dow. We have a pretty sharp pullback. I think we have a pretty sharp pullback, but the weekly charts are saying that's going to suck more and more of the public in, especially after the news today that for the 9th day, maybe 10th day, whatever it is, we've made a new high, consecutive high. I'll be back tomorrow. Stay tuned for Larry Pesavento. Have a